Hey everybody, we'll get going here in just a second. I've just got some putting my last minute notes together. Hope you're all having a good day today. All right, welcome everybody. Thanks for taking some time out of your day. I've done a couple of Periscope videos in the last couple of days, and I've gotten a number of questions back from some of my listeners on stuff in the market, investment strategies, what's happening, what can I do, what should I do. So I thought I'd do today is take a few minutes and highlight some of those questions and talk about, give you my thoughts on them, and also use Yogi Berra as an inspiration. We all know we lost Yogi this past week, and they had his funeral yesterday. So for those of you that are baseball fans or just fans of Yogi, I actually picked up this book. It's a great book, the Yogi book. It goes through and talks about what the meaning is of some of his famous quotes, and it gives you some real great analysis of what he was talking about when he said some of these hilarious things. So pick it up if you want a quick, easy read and quite entertaining. So I'm going to take two questions and highlight those and give you my thoughts on them. The first one comes from three different listeners. And the question is, what is happening with the market? And as we all know, when we watch the daily news shows, etc., CNBC, whatever, there's a lot of reasons, analysis given for what's happening in the market. And we'll talk about those in a little bit more detail. But I've also prepared some slides today, so you get some slides and some pictures for free today. How cool is this? So this is the VIX index. And this is an index which is used to measure fear. And the quote that I have here is, "You can learn a lot by watching," from Yogi Berra. Truer words have obviously never been spoken. So what I want to highlight here is what's happening with market fear or market uncertainty. And this is over the last 10 years. So if we start back here, we see volatility or concern was pretty low, and then it jumped up dramatically in the 08-09 period as the Great Recession took hold. And we hit historic highs here. And from there, after being up at these levels for quite a while, we eased off, and things got a little bit better in the economy and the financial markets. Conditions improved. The fear gauge, as this is called, moved lower. And then since then, we've had a few periods where fear has jumped up. But since the last jump in fear, we've had a pretty substantial move lower, and we've been hovering around these low levels for quite a while, last 3 or 4 years. And during that period, as we all know, the stock market has rallied significantly. So what's happened recently, and this is most recently is obviously right here, we've seen a jump up in fear or in uncertainty. And that's been driven by a number of factors. The conditions in Europe, conditions in China, the possibility of higher interest rates, whatever that impetus is, we've seen an increase in fear. But as Yogi says up here, we can learn a lot by watching. As we can see, if we watch this and take a close look at it, we're nowhere near where we were back in the 08-09 period. We've definitely seen an increase in uncertainty or volatility, but we're nowhere near where we were. So keeping things in a historical perspective, I think, is important here. And when we hear a lot of people talk about recent movements in the market, it's going to cause a repeat of what we had in 08-09. This will tell you that that's not the case. I think those fears and concerns are unfounded. So what's happened? We have a lot of uncertainty in the market. We have more uncertainty than we had over the last couple of years, driven by those factors that I just mentioned. but we're not at the levels we saw when things are really bad. What does that mean for your portfolio? Well, that's the next question that I get a lot. How should I handle this current environment with regards to my investment portfolio? So here's another graph I have for you, and this is the monthly S&P 500. And this Yogi quote is, "Slump. I ain't in no slump. I just ain't hitting." Well, this is the S&P 500 on a monthly basis going back 10 years. And again, as we saw the Great Recession hit, stocks dropped dramatically. And after leveling off at these lower levels, we've seen here, we've had a nice move higher in the S&P 500. And as Yogi said here, the stock market was hitting doubles, triples, and home runs for quite a while, 3-4 year period. And what Yogi was really saying here when he mentioned this quote is that if he was 0 for 4 today, when he walked into the ballpark tomorrow, he wasn't concerned about that. He wasn't thinking about that. And I think that's what we need to do as investors. We can't let what's happened in the past to us impact what we're doing with our portfolio today and what we're going to do going forward. Now, as we can see right here, we do have a move lower in the market, and that's in response to the increase in volatility that we just mentioned, we just talked about. But how do you prepare for this? What do you do in this environment? Well, it's a tough, difficult question to ask because I obviously can't see your portfolio. I don't know what exactly you're in and what you're doing. But if you have a longer term perspective, if you have a 5, 10, 15, 20-year perspective, and if you're not overweight in certain sectors of the market that are getting hit right now, such as commodities or oil or high yield, etc., you should be okay as long as you have a stable, diverse portfolio. It doesn't require you to make dramatic changes unless you're in those sectors heavily. Is it important to take a look and see where you're at and evaluate your conditions? Of course, that's always valuable. You can always do that. It's always a good thing to do. So my thoughts are to not do anything unless you're overly invested in a certain area that is under a lot of pressure right now. If you want to talk about that in more detail, I can certainly help you and take a look at what you're doing and give you my thoughts on it. And my last thing I'm going to leave you with today is from this book is this iconic photo of Yogi Berra catching Don Larson in the 1956 World Series. Just one of the greatest pictures of baseball history and frankly of American history. So what that reminds me of is remember the successes. Remember what we're doing all this for, why we have a portfolio, why we're trying to enhance our livelihoods, what we're trying to do with it. And remember those successes and enjoy them. Work hard and enjoy your successes. And as Yogi demonstrated right there, that's a very valuable thing, and we should do more of it and not continue to beat ourselves up when things don't go according to plan. Those are my thoughts for today. I'll just leave you with this. This is my contact info. If anyone would like to reach out to me, my name is Patrick Quinn. I'm with Hat Tip Wealth Management. You can follow me. Please follow me on Twitter at pquinn35 and on Periscope. And I hope you have a great day. And if you have any questions, please let me know. Thank you.